Hey guys, welcome back to the Market Monitor. Let's start by discussing the small cap index yet again. So today was a very boring day for me in the markets. I have done absolutely nothing today, just sat back. I probably didn't even look at the charts that much just to keep myself updated on what the small cap index was doing in the first hour of the day. And once I realized that the trend and the action was not really there, I was out of the markets for sure. So what happened today in the markets is very interesting and a very key point for every trader to understand. Right. So let's start by understanding exactly what the market has done from the month of June. Okay, so if I take you all to a replay. All right, so we see a very clear consolidation that took place after the market started coming up from its lows. So we had this massive downtrend, like I explained to you all in the Dow Theory video, right? And then we saw this up move in the month of April, but there was really not anything to do here. There was barely any setups that were good. Everything was coming up from the bottom, and there was no real action in the markets. Then we saw a much needed correction, a pullback, which lasted quite long. We took support from the 50-day moving average and then came up again. And this rally was good, right? This was a rally that you could make some good money. I personally was out of sync in this rally. I was not being a good trader. And that's what led me to really go through and deep dive into my mistakes and what I did wrong in this rally and how I could do better. Lo and behold, came the June rally and we did do quite well, right? We made 10% impact on portfolio in the first 2 weeks of June. And that was only possible because I was able to have the ability to go back and look at my mistakes, tell myself that the market is always right and that I am always wrong, and that it is important to look ahead and what you could do better. That being said, June starts after this consolidation that we see in the small cap index, wherein we faced rejection from the 200-day, then you take support from the 10-day. So it's very beautiful action. Then you come above the 200-day, you reclaim it, and then now you're ready for this takeoff. And then we see a big takeoff rally, right? And now somewhere on this day, on the 11th of June, I think we make equal highs, 18987. Okay, no, not exactly equal highs, but somewhat equal, like three points difference, right? So you make somewhat equal highs and then you've just continued falling. So you break this 10-day moving average, then you take support from the 20-day moving average, close above the 10-day, then you face rejection from the 10-day again, and now you're at a very pivotal level. Now we're at a level where the market will decide what its trend is going to be for the next month or so, right? From here, if we break this 20-day line, right? And then let's say you break the line, you close below it, and then you break these levels, then the markets are going to be very weak for some time because the 50 days already below the 200-day, and then we can start a very big down leg as well. That's the worst case scenario, that you break below the levels of 18,072 points, right? And then you are basically looking at a very big down leg. But if the market tomorrow decides to, give such an action, close above the 10-day, right, a little higher ideally, right, and then you pause again inside, take support from the 10-day, and then you break from these levels over here, and then you're on for a new rally. So there's a lot riding on the next 2 days, I would say. The market could very well tomorrow just stay inside again and not give us a lot of clarity on what's going to happen. But then Friday would again be a make or break day. So the remaining part of this week, the last 2 days are going to be very important for the markets. We're going to understand whether the markets are trying to go down again or are we going to start this up move. And regardless, we are prepared for any situation because we're in 100% cash. No trades have been taken since this day. When did I exit my R power position? So I exited my R power position on 11th of June. And when did the market start falling? I'm doing all of this in front of you guys. Perfect. So market starts falling from 11th of June. We are out of the market from 11th of June. So we've timed the market very well. And I can assure you, the moment the markets are on again, I'll be the first one to enter the markets and cash all these stocks that are going to set up very well. But that is for the market to decide. Now we have to see how the markets are going to be. Are we going to go into a downtrend? Are we going up and all? We don't know yet. So let's just give the market space to breathe. The next 2 days are going to be very crucial for the stock market. So let's see what happens. Now Nifty again, there's honestly nothing happening in Nifty. I don't see any trend. I'm very confused in the Nifty action. There's been a big base been forming here, but above these levels of, what is this? 25,222 points, there's going to be no no real move in Nifty, but that doesn't really even concern us, so shouldn't be problematic. Yeah, nothing to say here. Let's just have a look at these indices, because why not? Right, a lot of these are below their 200-day moving average, which is not good news. Realty. Okay, I want to see the defense. Okay, wow. Okay, so this is looking good now, right? I like this action, and this action I will show you picture perfect, exactly the same action in a couple stocks as well. Okay, so we move with this uptrend on the defense sector, the defense, whatever you want to call this index, get down, take support from the 20-day moving average, provide an inside day, and now we can see some action, maybe another day, and then we can see a breakout maybe next week somewhere. But let me show you this. Okay, so we're taking support from the 20-day. You go up, let's hide these drawings. You go up, you fall, you take support from the 20-day, and now you're ready at these pivotal levels. Is this not the exact same thing as this? You're up, you're supporting from the 20-day, and now you're waiting at these pivotal levels. Up, support from 20-day, and so GRSE is somewhere leading again this entire defense sector. Another stock I'm really liking, Apollo. This is also looking like a peach of a setup. Cochin is not that good, to be honest. This will need some more consolidation somewhere. Maybe you get 1, 2, 3, 4. Yeah, so somewhere around the Tuesday, Wednesday next week, maybe this would have some sort of action. But again, I'm very doubtful on how it's going to be. Cochin, GRSE, and what do we have? Masdog. Oh no, this is completely beaten down. BEML. I think BEML is a decent chart. Nope, beaten down. Let's have a look here. So if we have a look here with the defense sector, okay, yeah, so you can already see, like, we can already see that Sika has already given its breakout, right? So now we know that the defense sector has some steam in it for sure. Confirmation from this defense stock. Idea Forge setting up, but I'm not going to trade this most likely. Prima Explosives, I don't like this stock, too volatile. Apollo, GRSE are pretty much my top priority stocks. BEML to some extent, but again, this is doubtful as well. So anyway, like I'm saying, a lot is going to be riding on these next few days. Thursday and Friday is going to decide a lot of what the market is going to do, what it can do, what it should not do. Another thing I wanted to discuss was Wockhardt Pharma. Okay, now this is a picture perfect evidence reason for why you never buy before a pivot. Let's study what happens today. This was a good pivot to buy this stock. I did not personally buy it, and I tweeted this as well, that I did not buy this because I was still digesting the fact that R Power has given me these many gains. So I'm right now taking a break from the market on this day. And again, if we look at the small cap index, right, let's see next small cap, we weren't really at a good space in the index on the 11th of June. So there was no real reason for me to trade the stock. Then you're forming this inside sideways movement, beautiful movement, right? Nothing to worry about till this day. This stock, sorry, let me select a bar. Okay, till here, this stock was perfect. All that it needed was an inside day and index support, and we were ready for a big breakout. And I would have sized at least 20% over here, because my risk would have been nothing. It would have been 2% or something. I'm sure of it. However, the stock breaks down, and now you've broken your 5-day moving average, right? You've broken the fact that you were riding with the 5-day moving average ever since you posted earnings, and you had that earning reaction of 8%. Now that's not good signs. And today what happens? Today, at one point, this stock from its close was up 8%. It respected this high of the 12th of June, and now you have reversed fully. Just look at this squat. This is a massive squat on high volume, right? Let's break this. And so today we've seen 773 crores of selling in this stock. I'm not saying all of it was selling, but the fact that it's closed this badly on such high volumes is not a good sign. Like, that is not something you want to see. So again, now Wockhardt Pharma, the setup is probably gone. If you look at Subros, right, this is still decent. This can still go ahead and form its base. It's still not very deep as a fall, but this should not fall more. Now you need to form that sideways movement, and again, somewhere next maybe after 5-6 days of consolidation or 3-4 days of consolidation, you can be ready. But now you need to give me that action that I require. And now your 50 days also up. So this could be good signs. But if you look at the rest of the auto sector, there's no real movement. Like there's absolutely nothing to look at. None of these stocks are setting up at all. Like just there's no action. The markets are very, very, very weak. Cholamandalam, again, no action here. 63 moons. Let's have a look at this. Okay, so you made this base, beautiful VCP formation. Okay, 63 moons is still something that could work. Like I would still have my eyes out on 63 moons. This would just have to be moved here. So yeah, this can still, now over here I need a couple days of consolidation, and this could work well with MCX. Nope, that's already broken its high. Yeah, so as you can see, I'm clearly struggling to find setups, and that's not a good sign, right? Whenever, and I will tell you this, and Mark Minervini has said this so many times, that whenever things are going to go good, setups will proliferate. And this is 100% true. Every time the market is ready to move up, you will see setups being formed very quickly. You will see that there are 5-6 setups. You will see that sector are there in action, that there is this one sector which has 5-6 stocks in that, and from that 5-6 stocks, 2 of them are really good. And that is not happening right now, and that is not a nice thing to look at. I still have to do this screening for today, but just off the top of my head, if I'm looking at all of these, I'm not getting good signs, right? What about Sudarshan? Let's have a look, because that was looking very promising. Sudarshan Chem. Okay, this is still decent. This still is decent, but again, it's a bit wide. Come up another day and then maybe can be looked at. But yeah, the idea is that there's no real action. There's no strength in the market. There's no need to even put your time in the market right now. Just sit out, enjoy the good vibes, like nothing to do. Absolutely nothing to do. I've seen a lot of FinTwit going wild about, let's buy this stock, let's buy that stock. But see, what you need to understand is that the stock markets are going to remain the same throughout, right? The most important aspect of the stock market, and I don't think I will repeat this again after today because I've said it a lot of times now. But this, if you get this, what I'm writing down on the screen, if this gets implemented in your head, that the market environment and then the sector and then the setup, this is the order and this is the priority level of how you're going to look at trading the stock market, I am sure you will be profitable. Because it's only when you understand that the environment is key. In a bad market, even the best setup is not going to work. And in a very good market, even the worst setup has chances of working. So the idea is that this has to be engraved in your mind, right? And that is only when the markets will really reward you and give you that sort of sense that, you're doing something right. And if we look at what was a good stock today, some of the top gainers today, Axis Scale is another defense stock. R Power and Reliance Infra have just taken sort of supports. Okay, another thing I wanted to speak about is that I did not trade Reliance Infra, right? With this R Power boom, I did not trade Reliance Infra, but looking back in hindsight, maybe I could have traded this stock. I know it's a 5% circuit stock. It is a T2T stock at that time, and that really exceeds risk. But I think I'm only going to tackle that by taking a small 5% position. So even if I have to take, a 5% position and a 5% loss, right? That would not really impact my portfolio that much after sitting on a profit cushion. So I think next time I will try and target these T2T stocks if they are forming these A-class setups like Reliance Infra was, right? Like this was a beautiful setup. You're supporting with the 5-day. What is your stop loss here? 3%. So a 5% position, 3% stop loss, that's not a big impact on portfolio. So that is still dealable. Like you can go ahead with that. And it had news flow coming in, and R Power was setting up at the same time. So things were looking good. So that is one learning that I've had from this entire space. But apart from that, I think that it's good to sit out. So if steels are doing well, like Monarch Gold, then what is Lloyd's SME doing? Okay, so this is nice. I like this action in Lloyd's, right? This is good action. But again, the ADR is too low, man, in Lloyd's. Like I don't like this 3% ADR. I want to see that 4-5% ADR because that's where you truly see moves. like GRSC, look at that, 6.7% ADR. That's where you're going to see those big moves. But yeah, I think that should cover the markets for today. Again, my genuine thing would be don't trade in this market. Sit out, stay in 100% cash. Make sure that you're not risking your hard-earned capital and your hard-earned gains in this market. See, the thought process is simple. When you have a profit cushion, taking the next risk is very easy. Now that I have a profit cushion, I know that I can enter a 15-20% position size without thinking twice, because my capital will allow me to do that, right? I don't need to worry that I'm going to take money out of my capital. If anything goes, it's going to be out of my profit cushion. So a profit cushion, once you have that, you need to know how to utilize it. And that's why I stay out when the market is weak. There's no need to trade in this market, right? When the market moved from 29th May till 10th June, if you missed the first defense rally, you still had our power to cover. If you missed this rally of defense, this initial rally, then you had this rally to cover. So you're going to get multiple opportunities. So just stay put and don't trade in this bad market. And apart from that, I would say, yeah, I guess that's all for today's Market Monitor. Thank you so much, and I'll see you guys tomorrow.